Hello everyone. This is the pre-market report video for 3rd February 2023 in terms of Nifty and Bank Nifty. Finally today, hoping for a normal day. Last 3 days was really crazy. It was very volatile. Yesterday, Nifty opened a gap down of 100 points. Then in the next 5 minutes, it dropped another 40 points. Then in the 30 minutes, it shot up 175 points, again dropped to 125 points, increased 100 points, then again dropped 100 points, and finally again increased to 90 points and closed marginally down. It was a proper expiry day. For the second consecutive day, Nifty closed negative, whereas Sensex closed positive. As Sensex index don't have Adani stocks, where Nifty got both Adani Enterprise and Adani Port in the index. Anyway, about Adani, we'll discuss in the later part of the video. Regarding budget, at present, most of the investors widely accepted that this has a growth-oriented budget and only insurance sector got affected a little bit. Sector-wise, IT and FMCG increased by 2%, whereas metals fell over 4%, then energy and power sector dropped over 2%. Again, FII back. After 1 day of net bought, yesterday they again net sold shares worth approximately 3065 crore rupees, and as usual DII net bought shares worth approximately 2370 crore rupees. Despite the volatility in the market, yesterday India VIX crashed over 6%. Then coming to US, even on yesterday's pre-market video, I mentioned about the Facebook Q4 results. And because of the positive results, day before yesterday, after the US market close, Facebook stock price increased over 20% in the post and pre-market trading. Apart from posting super results, Facebook also mentioned that they are going to buy back the shares worth of 40 billion US dollars. So last night, Facebook parent Meta stock price increased over 23%. Along with the super results, day before yesterday, Fed chairman acknowledged that there was a progress in inflation control, which he didn't accept at all in the last 10 to 11 months. So together made all the tech stocks super duper bullish. For example, both Google and Amazon increased over 7%. Then both Apple and Tesla increased excess of 3%. However, there are some weakness in the Dow Jones. It's mainly due to some US medical insurance related. Honestly, I don't know how the US medical system works, but apparently last night US government proposed the medical reimbursement rate below the analyst estimation. This put all the healthcare sector stocks under pressure, which subsequently affects the Dow Jones. In the end, for the second consecutive day, like Nifty, Dow Jones closed negative 0.11%, whereas S&P 500 increased by 1.47% and Nasdaq rallied 3.25%. Then about US VIX, it too crashed near 5%. Dollar index value is around 101.5 and 10-year Treasury bond yield was in exactly the same place as day before yesterday, which is 3.39%. Regarding oil, again it is down by another 0.5%. At the time of this video, WTI crude oil is trading near 76 US dollars per barrel and Brent crude oil is trading at 82 US dollars per barrel. Coming to Indian areas in US market, both banks and IT closed super duper positive. Both banks increased 4% and both IT stocks increased over 2%. However, regarding SGX Nifty, at 3 a.m. Indian Standard Time, it closed at 17,682 and it is kind of indicating only 20 to 30 points gap up opening. Is it all positive in US market? No. Again around 3 a.m. Indian Standard Time, Apple, Google and Amazon released their Q4 results. Unlike Facebook, now these three companies announced the poor earnings. Apple's revenue down by 5% year-on-year basis. Amazon beats the revenue but provided the negative future guidance, and Google missed their earnings and revenue guidance. And because of all this, now in the post-market trading, all three companies' share price were down by over 3%. So these are all what happened in the global market. Now let's move on to the Indian market. About Adani Group, in the last 3-4 trading sessions, they lost over 100 billion US dollars in the market value. In terms of Indian money, it equals to over 8 lakh crore rupees. And because of that, NSE puts three Adani companies such as Adani Enterprise, Adani Port, and Ambuja Cement in the additional surveillance mechanism, which means for trading in these three stocks, one must need minimum of 50% margin or the existing margin in case whichever is higher. Additionally, RBI started the discussion with the major Indian banks about their exposure to Adani Group. But on the positive side, Adani Group last night paid their due coupon on the US bond payments, and in order to arrest the price slide, the company announced that they are going to release their credit report today. Let's see. It may be work in favor of them. However, retail people kind of lost their confidence in Adani stocks, so I'm hoping that they might try to exit the position as soon as possible. Then, regarding earning results, Titan and Dabur released their Q3 results, and both of them was not good. On year-on-year basis, Titan's net profit drops 10%. On the positive side, revenue increased near 16%. In case of Dabur, their net profit fell by 5.5% and the revenue grew only 3.5%. The problem here was their drop in operating profit margin. And final information I like to discuss is about the Hinduja Group. I mean, as a promoter of IndusInd Bank, they approached the RBI to get approval for increasing their stake in IndusInd Bank from 16.5% to 26.5%. So, this information is clearly positive for IndusInd Bank. As a summary, US market, Indian banks, and IT areas all closed positive. Even SGX Nifty is indicating a gap up opening. However, the healthcare weakness in US market might affect the Indian market as well. And Indian IT areas closed super bullish because of the US tech stock rally. The problem now is, as I said, in the post US market, Google, Amazon, and Apple all dropped over 3%. So we might have problem there as well. And the important one, I don't know the reason, maybe because of something related to oil. Yesterday, Reliance got the huge short position built up. I think that's the reason, despite 3 to 4% positive close in Indian banks and IT ADR, SGX Nifty indicates only 20 to 30 points gap up. Now, coming to technical, on the daily charts, both Nifty and Bank Nifty forms a medium bullish candle with a minor upper and lower shadow. There is no formation name that I'm aware of it. However, this small shadow and along with the last 4 days closing point indicates a range bound. For example, Nifty was always around 17,600 and Bank Nifty was in the band of 400 points. I mean between 40,300 to 40,700. This kind of indicating the market's bottom reversal. In Nifty, a sustainable move above 17,800 levels can indicate a bullish reversal. And in case of Bank Nifty, if it closed above 40,500 today, then in the short term it can go above 41,250. For both Nifty and Bank Nifty, RSI value at present is around 36. Then coming to moving averages and technical indicators. For Nifty, at present on daily chart, Nifty is trading only about 200-day moving average. So as a moving average summary, it's a strong sell signal. And in case of technical indicator summary too, it's still a strong sell signal. Then for Bank Nifty, it's better than Nifty as it reclaimed and moved above 5-day moving averages. So as a moving average summary, it's upgraded from strong sell to sell signal. However, in case of technical indicator summary, it's still a strong sell signal. As you may know, yesterday was the options weekly expiry. So I don't prefer referring open interest. So instead of options open interest, let's have a look at the pivot chart for the Nifty and Bank Nifty. So from pivot chart for Nifty, at present the immediate support is at 17,440. On the higher side, the resistance to break is at 17,770. Then in terms of Bank Nifty, the immediate support is present at around 40,020, whereas the resistance is at 41,390. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make an investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers educational purpose only. Thanks for watching.